Hello and welcome to the closing beat, everybody. Happy Tuesday to you. How you doing out there? All is good? You guys doing well? Welcome. We're financial advisors at Jazz Wealth, and you can actually see the studios there. I don't know how to go back now, but you kind of see what's going on behind the scenes there. We are financial advisors that spend our effort and time towards teaching, not having a fancy office or anything like that. So if you like to find our Dungeness warehouse in Florida and you want to come hang out with us, let us know. We're always here. While other advisors are playing checkers, we are playing chess. Got a client that is building a helicopter. Not a big one, but, you know, like building a helicopter there. I said, okay. He said, what should I consider? I'm like, well, there's some tax strategies there we should work on. We should probably work on some estate planning, figure out what to do there in case you're not the best builder ever, and maybe a little bit of protection there as well. So we don't do that here. I certainly send them on to the right people to make sure that in case they put that helicopter down in the middle of a parade accidentally, that they're not gonna, you know, lose their shirt if they're alive, I should say. So anyways, hopefully you'll check us out, jazzwealth.com. You know, here's what's going on. I'm gonna come over here. Look at what we have in the S&P right here. So basically what happened this morning, news-wise, you go, uh-oh, retail sales, they were better than expected. We're not stopping shopping. We're still out there spending our money on goods and services that we probably don't necessarily need 100% of. And, well, darn it. So what does that mean? The Fed, maybe they have to raise rates. That's the belief. That's not what they said. That's just what people believe, and the bond market sort of responds to that. It's very, very obvious in the market when these news events come out that that's what the adjustment is. But the S&P just can't make up its mind. See, over the last 5 days here, we haven't picked a real direction. And so the technical traders have a reason to pause, right? Because they don't know that we are going to break this prior high. Certainly looks that way, but it's not done yet. We don't know. The technical traders that follow the 50-day moving average go, oh boy, we're in a downtrend here and we are stuck below the 50-day. I'm not a big believer in that necessarily. I'd like to think of it more as a rubber band, as a caution area, but not like a tried and true, hard set number. But nonetheless, people look at that. You also have people that use other moving averages. They use other technical indicators that say, in the short term, we're just a little overbought. On the other side, you have people that say, we're going to break that. I'd like to get in first. There's a reason to believe it and everything's going to be fine. However, this could be the first sign of the mood changing in the market. If you've been around, you've been watching us here for a little bit, you may remember this guy. So I shared this here that so far year to date, the stock market is essentially behaving just like it does on average. Almost perfectly. The gray line is the average yearly performance of the market going back to 1945. And then you plot, well, at the time, plot this year-to-date's performance. Do you see anything that looks much different than the average? No. The mood of the market has been, I'm just going to be average this year. That's all I'm going to do. I don't feel like doing much else. The reason why that's odd is because we know that in October, we're supposed to have the widest monthly range. On average, by quite a bit, actually. So in October, the difference on average between the high and the low of the month is about 7%. Let's come on over here. What's happening? We're nowhere near moving 7%. We're not setting a large range. Granted, this is the start of October right here, but we have nowhere near come close to setting a wider, more volatile range for October. So if we know that's what's supposed to be happening, and the market has essentially been doing everything that it's supposed to all year long until now, is this the first sign of a change? Well, one thing we can do is look a little bit further. We could say, I'm a little worried. Let's just make sure the market's not changing moods here. 1, 2, 3, 4, 5 days, right, where the market has been stuck in less than a 0.5% range. Okay. Is that odd? Like, what happens when that happens? Historically, when the market does this in a new downtrend, short-term performance is bullish. So think of it as the market coiling up, not quite ready to make a decision, waiting for that right catalyst to make its decision to pop. And if you want to look at it from a purely, buyer-seller perspective, it's people that are unsure whether they should be buying or holding tight or maybe selling right now, right? So they're saying, I'll wait. As soon as they get that catalyst, whatever it is, breaking of the high, the technical pattern, some news event, really worry about that, Biden going to Israel thing. That's a little bit weird. But let's say all that goes well and the war de-escalates and oil prices come down and all that. Okay, catalyst, fundamentally. I'm not saying that's going to happen, but I'm just saying the cool thing is the market, if you're paying attention and watching, the market's mood is changing. Now, if the mood does change, does that mean it's bullish or bearish? For the moment, historically, that still means a little bit bullish, at least in the short term. However, if the market's mood changes and we sell off from here, now what do you do, right? So I like to notice those things in the really, really short term while we can see them, and then point out those things as we go. We got a lot to work on here today. NASDAQ, same thing, just not as tight of a range, right? So I didn't study this one. I didn't go back and look, right? Because it's not kind of a range here. It's sort of just bleeding off of the highs there, not the quite testing of the prior highs. So not too much of a problem there in my mind as far as like us falling asleep for the rest of the year. Probably doesn't happen. The Russell continuing to move off the lows here. It's a promising sign. The Russell, again, having a day where almost all broadly purchased, sort of things were going on there. That's okay. You like to see that. It's the most oversold, and it's trying to work its way back into being positive for the day. Oil moving higher again today. It seems like that's a big move. 1.35%, $1.15 or so to the upside. But given the recent wildness, volatility that we've seen in here, it's a little bit of a recovery. Notice where it stopped. Is the glass half full or half empty with the price of oil right now? If you had to look at just the chart, you can't look at anything else. You can't take your opinion out of it, right? Half full or half empty? Probably 50-50 shot there, right? What happened? We sold off aggressively from the highs all the way down to the lows here. We talked about it as well, saying that's an overcorrection. That shouldn't be happening there. Look for some buying. It comes in. Where does it stop? About halfway from the high to the low. You see that? So that's literally just the old argument, is the glass half empty or half full? We don't know which side to switch to because we're stuck right there in the halfway point. See it? Right there. So whether you're a Fibonacci trader, a psychology type trader there, fundamental, whatever it is, you look at that and go, nobody else can make up their mind. Why am I going to be the one to make up the mind and move the oil markets? It's just not going to happen. You're not going to be that person. So expect more action when you go through the halfway point. And people could say, well, clearly it's half full now. Oh, coast is clear, higher oil prices. Or we have a convincing sell-off day where the low of the day is very much close to the close of the day. For example, here's a string of dates. Not really. Let's go. Right here. So look at this one. I'm just randomly picking one. What I'm saying is where the close, which is right here, is close to the low of the day. That's your convincing move to say, oh, the glass is half empty. Oh, I don't like that. But we're not getting that at the moment. So a little bit of a wait and see there. Gold, nice and strong here. Back to the top of the downtrend in the short term here. There's going to be a lot of talk about gold, the dollar and everything as we get into November. So we'll leave it at that for the moment because you likely don't have a reason, provided there's not some real escalation in the war or anything. You just don't have a real reason for gold to just take off right now. So it's probably about it, at least for next week or two. Okay, rambled a little bit. Let's go on to bonds. So bonds, interest rates moving higher, sadly. Sorry to hear that one. I don't know what to tell you. Just a falling friggin' knife. That's just basically what's been happening there. I do want to talk about this for a second. Short-term, long-term bonds here. Through the course of this year, $672 billion, as of yesterday, 2 days ago, has been bought in bonds and municipals by households. So we track this. You track households, international buyers, pension funds. You can actually see who's buying and what they're buying. Money market funds are another one. So 672 billion has bought from households. That's the highest category of people or companies that have been buying bonds. Okay. Now, households also includes hedge funds. I don't make the rules. Just households are people like me and you, and hedge funds. I don't know. The next closest buyer of bonds and municipal bonds in the United States is $310 billion. So that's like half, right? And that's from foreign investors. So just by me telling you that, I'm not showing anything just yet, but I'm going to show you in a second. Just by seeing that, we go, okay, households and hedge funds are doing the majority of the buying. I get why hedge funds are doing it because there's a currency trade in there that you can do, sort of like a guaranteed small percent return that they're doing right now. Not arbitrage, but there's a whole strategy that they use for this kind of thing with the dollar. But let's say that's all we know. Households and hedge funds buying bonds and municipal bonds. The next thing that you want to know is, are they buying towards the front end of the curve, I'll talk about it in a second, or the back end? Meaning, are we buying shorter term bonds and notes and things like that, your 1 year, 2 year, 5 year? Or are they going out further and buying the 30 year? No, they're not, right? All the buying's at the front end of the curve because that's where all the higher interest rates are, right? So that's the next thing that you want to know. Now, we know it's hedge funds that are doing the buying, and that it is households as well, like individuals, but the majority of it is hedge funds. We know that because of where the buying's taking place. So a little bit of a good sign there, because if you look at rates here, obviously, they're bonds, look at the price of them, they've fallen so significantly that hedge funds go, a 50% discount? Okay, yeah, I'm willing to invest and start trickling in. So we've been seeing that there. This will continue because what's happening now, you have banks that are selling off, right? Selling off their bonds. That's why we still have this selling pressure here. Banks are selling off their bonds to account for, they call it duration exposure, to account for that because people are taking money out of their accounts. What's happening? Why are people taking money out of their accounts, their savings accounts? Because they're putting it in bonds too. Those are the households, right? So as banks have less money in their balance, did something just go off? As banks have less money on deposit, they don't need as much in terms of bonds. They sell them off, even if it means for a slight loss there. Also, what is quantitative tightening? Right? Ooh, fancy word. Quantitative tightening is who's selling? The Fed, right? So they're not quantitatively easing where they're buying bonds. Now they're selling bonds. So we have that selling pressure as well, all being translated or transferred over to households and hedge funds. All of that to say, we have a little problem, and it's about $1 trillion problem. There's a $1 trillion supply in the bond market, meaning $1 trillion that needs to be absorbed by somebody. The government, the Treasury, they're saying, we have $1 trillion in bonds that we need to sell. Anybody want to buy them? So far, so good. The $1 trillion is to support the spending of our government. That's a little bit nasty there because who cares? The Republican, Democrat, we could still be friends, we're buddies, I don't care. But the spending's out of control. There's $1 trillion more in excess of what we already need to run the government that they're trying to sell these bonds to. In addition to having the Fed selling theirs, in addition to banks trying to sell their bonds. So long story short there, that's hopefully a simplified breakdown of what we have going on here. And aside from the short day-to-day stuff where people say, we're not spending, or we're spending too much in retail stores, therefore interest rates go up, therefore bonds go down, bond prices. Aside from that weird little one-time economic event, that's what's happening in here. So I've been trying to find a way to explain that. Now, let's take it a step further. Who's buying all these? Of the individuals that are buying bonds, the 70-plus-year-olds. $332 billion from the 70-plus-year-olds. They ain't no dummies. They need that safer income. It's been years, if not over a decade, since they've been able to get these higher rates. That is advisors, money managers, older generation that's smart enough to know, of course, what to do. They're moving money into those higher, although shorter term, duration bonds to get the higher interest rates with presumably no risk if they hold through to maturity. Then you got the 55 to 69-year-olds, $533 billion so far year to date. Yeah, that makes sense too, right? I'm about to retire. I'm sort of in retirement. I've been in the stock market. Well, that's a lot of risk. I'm going to shift some of my money over here because now I can get a guaranteed return that's a real return that's greater than nothing or a negative number. Then you got 40 to 54 here, slow transition over there, and anybody under 40, rightfully so, is not chasing bonds at this point. One thing I'd like to point out, this is not my data. This is directly from the actual transactions. The top 1%, the big money, right? The people that make a lot of money, spending almost but basically the top group of people that have a lot of money out there, they're the ones that are making this transition. What do you think is going on there? Why are the lower income people not so much moving money over? It's because no one's telling them to, right? The top group, the biggest and most wealthiest people out there that make the most money, you got people like me saying, go. Put your money over there, right? That's where you need to go. If you're a lower income person, you're like, I don't know. What am I supposed to do? I'm going to buy a CD at the bank. Oh, that's cute, right? I'm going to do a little what do they call it? The 6-month CD or whatever. That's cute, right? What are the wealthy being told? Go over there. And that's proof of it right there. So kind of fun to look at. Anyways, a little bit of a ramble there. I'd like to move on. If you don't mind, then I'll take your questions. Bank of America with earnings revenue, which we would normally say sales, but it's revenue. Only up about 1%, but their earnings up 10%. What did we just talk about yesterday? If you can have the same amount of sales, but make more money, is that not a win, right? You sell the same amount of watermelons, hot dogs, whatever corner stand, peanuts and things, same amount, but you make more money, you're a happy camper. You didn't have to do a whole lot more. Also, kind of sad, I'm going to throw this out there. I'm not picking on Bank of America. I don't know, good or bad, call them what you want. The total deposits up 6%. And their words, not mine. They said, we're not seeing any deposit pricing pressures. Meaning they're not seeing a reason why they should pay you more for your savings. Okay, that hurts a little bit. I don't know if I'd have said that, but that's what they said. They feel no sense of urgency to compete because deposits are up. They have more deposits. Why pay more? If they had less deposits, they have to pay more. Johnson & Johnson also beat on, they had their earnings out. Revenue beat by 1%, earnings beat by 5%. I just thought this was interesting. This is the first earnings report of the quarter where they said, we have some signs of FX headwinds. Remember a couple quarters ago when we talked about that? Uh-oh, the dollar is getting stronger against the other currencies. Well, they have business over there. So to convert back to a dollar, it costs them money. There's a spread there, which is, they have to eat it. I mean, it's part of doing business. That's the first person that said, or first company that said that. Don't know what it means. I'm just saying, when little things happen like that, put it right back in the old noodle. And just keep an eye on that. Netflix, we have Netflix. They are reportedly looking to raise prices. When that has happened in the past, and there have been news reports of that, they did raise prices, so that's probably true. And General Motors said, wait a minute, we were going to convert one of our plants in Michigan over to a fully electric vehicle plant. They want to convert all of them over by 2035 anyways, but they said, we're going to convert this one here, but we found some additional efficiencies. So before we do our conversion, we're going to go ahead and work through all of that stuff, which means it's going to take a little bit longer to convert that plant. A lot of people thought that had something to do with the strike. Maybe from a dollar perspective it did, but I think what they're doing is seeing we can manufacture this more efficiently, which means cheaper, which means a higher profit. If we have to delay it by a year, let's do it. You know what I mean? All right, lastly, I'll pop this out. If you have any questions, now's the time to ask. I'll get that ready. President Biden going to Israel tomorrow. I always worry about these things. I guess I'm getting old. Sorry, we got to do the leaderboard?
Yeah.
Right? I left you out. I got going there. Who do we got?
Oh, okay. We got Vanessa, Ryan, Mark, Mateo, and Daryl are your leaders today for Guess the Dow. If you want to play, jazzwealth.com/Guess the Dow for your chance to win a free $100.
Funny story. When I was in school and you do like Spanish class or whatever, Mateo. I always like that name. I always pick that name.
Oh, okay.
So I'm kind of cheering for Mateo there.
Oh, I like it.
Good luck to you. Need the market to fall a little bit. But like I was saying, I don't care if you like or hate the president, whatever it is. You kind of worry when they just throw these trips together to a war zone, and it's like, we're just going to go over there and show some support. I get it. I see why one side would pressure them to go do that, but I just hope they're dotting their T's and crossing their I's. Like when Bush snuck out to go to, he went to Iraq. When he snuck out to go over there, we didn't know at the time, but you're like, I don't like that. You're the leader. I'm not sure. Can we fly over it? Maybe that's a little safer. I don't know. But that one, as I get older, I'm like, okay, you get some bravery points there. I get it. We have the most powerful Secret Service and all that stuff in the world, but everybody makes mistakes, and it's just one of those things that just makes you think a little bit. Anyways, Fast Eddie says, no company take a loss. They just pass it down to the consumer and profit from it. Ooh, one of those bad corporate people. Oh, those are bad people. I don't know. They are in business to make a profit. So if they have to, here's the thing. If they have to pass it on to the consumer and the consumer pays it, are they really bad people? You still wanted it. You were willing to pay more. I went to Disney World. I really wanted to ride this ride. It was $22 to ride this ride. In addition to the park, I paid the $22. Wasn't worth it, but I did it. Anyways, it does boost morale, I guess, And I totally get it. I'm not saying he shouldn't go. I'm just saying as I get older, like in the past, you'd think, yeah, get over there and show them. As you get older, like, people broke into the Capitol. People somehow escape from prisons. Like, we don't mean for these things to happen, but they do. And so you always worry, like the president's over there, and I get that Chuck Schumer or whoever was just over there. You just worry. Somebody happens to be looking this way, Secret Service looking that way. You don't want to see anything bad happen. It's not good. But I'm sure everything will be fine. I just sharing my deepest and darkest emotions there, what I worry about at night while I'm falling asleep. What's the biggest drivers of oil stock prices? Scarcity predicted by Well, we have the slight decline in production, right? So Saudi Arabia is going to keep doing that. I think it was June of next year. So a slight reduction in production. And so there's that part there. Demand also still pretty strong globally, right? And so you add a war into that, a possibly escalating war, and you get you get what you get. Why don't you put your guess in for Guess the Dow every week just for, me? Yeah, I mean, I think it says in the fine print there that we can play, we just can't win, right? I think so. Okay, yeah, so that would be fun. Yeah, I'll do that. Anything strategic oil reserve effect at the moment, anything going on there? Not that I've heard of. I know it's not as strong as a lot of people would like, but not that I've heard of, at least in the short term there. Yeah. You asking me what my favorite Mexican food is? I mean, do you have a favorite Mexican food?
No. Chipotle.
Should we ask Kevin?
We do have a Mexican here for that.
Kevin?
He said tacos.
Oh, whew. Kevin's Mexican. I like nachos myself. I don't know if that's traditionally Mexican, but when you put beef and beans and cheese and on chips, because I love chips, so I guess I'll go with that. Starting to see evidence of higher interest rates affecting discretionary products. Certain industries laying people off little by little, right? Not a complete reversal of the ship, but just little by little. What happened with, LinkedIn yesterday, starting to lay off some people? Things like that bother me. Like when it's not 100% tech-driven layoffs, I get the auto stuff going on. That starts to bother me. You go, ooh, okay. So we're not absorbing the higher costs, which allow them to keep making profits and continue to hire those people as much. It's not big numbers just yet, though. Yeah. Yeah. Oh, look, there's an ad inserted. So we're just hanging out? That's stupid. Why does it do that? I don't like that. I just saw a little thing pop up. Can we not do that? Like I was just like in the flow, was just doing what I do. And now I gotta All right, wait. Oh, we're just good. Okay. Hey, it's going. Yeah, I don't like that. That's weird. I've never seen that before. And do we get a few dollars off of that? Seriously, just last thing, and then I'll wrap this up. What do we make? Like $6? This is, yeah. On a good day. Yeah, I'm not joking. We don't do this for the money. Just so y'all are aware of that one. I'm not sure how these people are making all this money on the YouTube, but that's not part of my financial future. Lastly, yeah, Jazz After Dark tonight. Is it going to go up? So Jazz After Dark tonight, we're going to do a cool little study. You know how the 7 stocks are leading the market this year? I'm going to show that. Then we're going to go back and go, what if you would have bought those, let's say in 2000? What if you bought the 10 best stocks? And you knew better. You knew that those were going to be the best ones. What if you bought them? Yeah, you had a great year. How did it translate? And then 2005, what if you bought the 10 best and you knew they were going to be the 10 best? So that'd be really cool. So join me tonight for Jazz After Dark if you'd like to come hang out there. Otherwise, I will, I'll see you tomorrow or whatever it is, and we'll be back. Done.